Hey there, I'm Dan Fitzpatrick here at stockmarketmentor.com, and it's Tuesday, May 20th. Look, the stock that's really kind of, at least on my radar screen today, is Caterpillar. You can see what happened. The company announced their earnings. They lost, and I'm not going to read you the specifics. You can go look at that online if you want. Their sales globally, 13% decline. Basically, all their numbers were kind of ugly. The one thing that kind of jumped out at me was February 2010. And that is the date when there was last a decline of this magnitude. So I'm looking back here in the first quarter of 2010. And I don't know when they announced back then, but let's say it was on their earnings announcement in April, which would probably be the case. April 2010. So what happens to the stock? Stock ultimately, like we just go here, like to the very low. Okay, the stock goes down 22% before it ultimately starts moving higher again. So that is from the high here. Now let's look here at where Caterpillar is. And don't get the wrong idea. I'm not coming out saying like I'm really bullish on Caterpillar. I'm just looking at the chart. Okay, so let's go down 22%. It's about here. Okay, so this stock, if a similar thing happened, this stock could fall right back to this congestion phase from 2013 if we got the same kind of sell-off. I don't know whether that's going to happen. I'm kind of looking at it. I kind of don't think so, but you know, we'll see. But that's really the analysis here for me, is if we get the same kind of magnitude decline as we did in 2010, and let's go from high to low. Okay, yeah, 22% on this, wherein the stock started moving higher. If we get the same magnitude, then this stock from the top, not from where it is now, the stock from the top down 22% will pull right back into the support. So let's see how we can trade that. Okay, 86, 87 on the top, 87, 82, so the mid 80s. How about that? Looking at this here, 50-day moving average. So I'm looking at this. This is basically where support is. 200-day moving average is above that level. So here's the way that I would analyze Caterpillar. First thing that jumps out at me at this on this chart is this. Boom. Okay, we get a big sell-off to the 50-day moving average. Stock jumps up again. I'm sure this is in response to Q4 earnings. But this stock was just getting out of a base. Now, we're looking at the stock from the low, just December low, up to the high. Okay, the stock's up 30%, a little over 30%. That's from the low to high. So we could see some profit taking. We could see, and I think it was up, I think I read like 15% first of the year, something like that, up 15. It was up 15%, or maybe it still is. Yeah, about 15%. So the stock's still up for the year. But think about it. Don't you love it when people say that? When, you know, you'll see CNBC, oh, the stock, you know, it's down like, it's down 38% just today, but it's still up 5% on the year. And I'm thinking, okay, how many people are taking solace in that? Like, how many people actually owned the stock from the beginning of the year, and they're going like, oh boy, I'm still up 5%. The bottom line is this thing got crushed 3.6% today, and from the top it's down a lot more than that. So here's the thing. I'm looking at Caterpillar. I can't be bearish on Caterpillar, just objectively. Oh, and by the way, I was thinking about this. I was just actually flying back earlier today from seeing a Journey in my favorite band in Phoenix, and I was thinking about what I'm going to be teaching at the ILAM conference in a few weeks. That's the Invest Like a Monster conference in a few weeks. And the thing that I'm going to be teaching is essentially what I'm talking about here. And that is, I'm going to be focusing on two things. It's not going to be options. You get options from any of those other guys. I'm going to be focusing on technical analysis and how to apply technical analysis to option trading. And I'm going to be focusing on the predator and the prey. The predator is you. The prey is the stock. So we're going to break that down. And one of the things that that I will say is, you look at this and are you bearish Are you looking at this and you're saying, oh my God, this thing is going to zero. Look at that decline. I'll bet it goes to I'll bet it goes to 80. Okay, you can do that. I'm looking at this and I see something entirely different. See, I'm not looking at this. I'm not looking at that. What I'm looking at is this. I'm looking at what's already occurred, and I see this pullback that led to a rally. I see this big, massive puke. This was like a total puke fest, okay? Big, massive volume. I see a pullback to the 50-day moving average. I see a buying opportunity. I see a buying opportunity, but I also see a lot of heaviness. Like I'm looking at this, you know, stock just hit like I think an all-time high, or maybe it was just a 52-week high, but I see a buying opportunity at the 50-day moving average like we got here. I see a lot of heaviness, meaning this stock ain't going to do that. You know, Jim Chanos had been talking about Caterpillar for basically all of this year anyway. He thought that the market was getting it wrong, that their global sales were slowing, et cetera, and that's exactly what happened. You know, so we could have a lot of funds decide, well, maybe that Chanos guy, maybe there's a reason why he's running more than, you know, $500,000. And so you could get more shorts leaning on this stock. I don't know. But as I see it technically, this is a buying opportunity, though, on a really heavy stock, So the way you take this trade is you look at the low of 100.52. So for my purposes, $100. It's at 101.56. So you can buy the stock. I'll explain this fully in just a second. You can buy the stock with a stop at around $99.50, something like that. You're risking a very small amount of money because you got to have a stop in. Otherwise, the stock goes down here and it goes down here. And are you going to sell it? No, because you've lost too much money. Now you're looking at the 200-day moving average, and you'll sell it when it bounces there, and you'll never trade again like this. Stock doesn't bounce. It keeps going down, and now you're thinking about Dan's 84, 85, and it's just too much. Now you've lost like 20%, and you don't know what to do except you're really ticked at me. So we're not going to do that. I'm saying you risk a little bit of money if you want to buy the stock right now, but you're not expecting $6, $8, $10 from this thing. You know, you're expecting a little bit of money, but the uptrend is clear. Nobody who I would care to listen to, and that list is short anyway, nobody who looks at charts would look at this and say the uptrend is broken. Sorry, it's not. The uptrend is intact. However, this is a problem. This is why I was saying at the outset here, the one stock that got my attention was Caterpillar. By the way, do you want to know a couple other random stocks that got my attention? Verizon and AT&T. Members, I'll tell you why that was so in the strategy session tonight. So the thing with this is, this so far is a buying opportunity. This is what you got to look at. Again, you key on the low here of 172. We'll just say $100. You key on the low of $100. What often happens with a stock like this is after this kind of shellacking, the stock will actually gap down. It'll actually gap below this low here and then wind up moving higher. So I can see that happening. The bottom line is this. This is giving you a buying opportunity for a trade, but you have to understand that as an investment, if you got a longer term investing thesis, maybe you buy a little bit of stock here, but if you have a longer term investing thesis, why do you even have to buy a little stock here? Because you've got potential for more downside. What I would suggest doing is look at Caterpillar tomorrow as maybe a little trade on a counter trend bounce. Realize that it's heavy, but realize that this kind of sell-off on a Dow component is not likely to go for another day. And if it does go, if this does fall further tomorrow, buy it at the close. You can thank me for that later. If it falls again tomorrow, if it closes like way down again tomorrow, buy it at the close and then send me a nice thank you note. Flowers would be nice, a card would be good. No candy unless it's sucralose, because I'm trying to stay off of sugar, and not too much sucralose either, because that can be an issue other areas. So anyway, that's it for this video. Hope this helps you on Caterpillar. Members, over to the strategy session.